Hello Sky Traders, welcome back to your weekly forecast video. This is Mina, your trading coach, and today we're going to cover the USD Yen forecast for the next week, or for this week. We published our weekly recap video, so don't forget to watch it and check it because we covered a recap for the USD Yen and the Euro Dollar as well. So without further ado, let's get started. As we usually do, we do a top-down analysis, so let's focus on the monthly, weekly, and daily chart. We covered the analysis for the past months and weeks in our weekly recap video, but we're just gonna cover some of the highlights so it can help us in forecast for the next week. So as we mentioned in our recap, USD Yen is always creating a buy pressure candles, breaking market structures, and following an uptrend trend line. And now we are approaching a very important level, which is a liquidity void area. So we can expect a kind of reversal or retracement. Yes, we are in an uptrend. Yes, US economy is always increasing the interest rate. Yes, Japanese yen is falling against the US dollar. But as you know that whenever there's an expansion, there's a consolidation or retracement, right? So on a weekly time frame, we are approaching an important level, which is the liquidity void. And this is the level that I'm talking about. So let's draw a horizontal line to identify this level. This is an important level, liquidity void area. And there was a liquidity pool or liquidity gap where the price didn't trade back to this level before, but now we're trading to this level. So a lot of sell orders were placed. Also keep in mind that on a weekly time frame, we are following this trend line, right? So we are in this channel. So we can actually expect a retracement or reversal from the top of this channel. And this is the liquidity void level, which is at exactly when 1 USD equals 145.187 Japanese yen. And this is also perfectly aligned with our trend line that we are currently following, right? So once we hit this level, we can expect kind of retracement or reversal from the upper level of the channel or the upper line of the channel, and as well as the liquidity gap area. So on a daily time frame, as we mentioned in our weekly recap video, we broke this order block, consolidated, tried to trade back, then broke this resistance or order block with a high pressure buy candle. So what we can anticipate on the 1 hour chart or like every single day in the next trading week. As I usually mention, that we wait for the important time of the day and days of the week. So when we expect a break of market structure, reversal, it's going to happen during this time. And these times are London session, New York session, or important news release. So what we can anticipate as a sell model on the long term, but a buy model on the short term. So we can either have a consolidation Monday and some manipulation to take out all of this liquidity at exactly 50% Fibonacci retracement. And then consolidation, London open, then we can have slightly retracement during New York open or New York session, and then expansion, some consolidation. Wednesday, can have some consolidation during Asian session, manipulation during London session, order block or slightly retracement during New York session, and then expansion. Thursday, we can have some consolidation again during London open, and we can have actually in New York Open, taking out all of the liquidity in London Open, and then expansion until we hit this near this level, which we can hit in Friday, because as we mentioned that during Friday we have a reversal of the week usually, so we can reach this liquidity void area and then we can have a reversal. So this is basically the outlook of the week. Let's highlight important levels. First one is 50% Fibonacci retracement level, this one. And if we expect a further push to the upwards or to the upward of the channel or the liquidity void area, we need to have and gain some liquidity first. And this might happen during Monday. So since this is an important level, and if we wish to place some buy orders, this is an important level of liquidity as well. As you can see, a lot of wicks and rejections, so we can anticipate like a lot of buy orders were placed and scattered all of this area, or it's a strong support level from a tail point of view. So if we need to gain more liquidity, we can hit this level and we can hit this level, right? Some trades all over the week, there are a lot of opportunities. So we can have a long opportunity from this level to the liquidity void area, or some buy positions scattered all over the week during London and New York Open. Or you can just wait until we hit this liquidity void level and have a trade with almost like 6 risk to reward ratio. Quick tip, we wait. We wait for important trading sessions, New York session, London session, and have the confirmation from the price. Another approach is consolidation during Monday opening, expansion to hit this liquidity void area, and slight consolidation by the end of the day, consolidation during Tuesday, some manipulation, and then expansion to the downside, and then consolidation by the end of the day. Wednesday, consolidation, some manipulation during London Open, and then expansion to the downside. Consolidation Thursday, manipulation, and then expansion to the downside, then consolidation by the end of the day. During Friday, consolidation, hitting this 50% Fibonacci retracement level, and then expansion to the upside, which is the opposite of the week. So some trading opportunities, we can have a long possession here, and short positions all over the week with the take profits near the 50% Fibonacci retracement level. During London manipulation or New York session opening. Or long-term buy position from 50% Fibonacci retracement level. Second tip is look into currency correlation. So check the positive correlated currency pairs with the USD yen, and if you have the same sentiment on this pair, so this confirms your entry, or look for a negatively correlated currency pair, and if it's the opposite, or if you're taking the opposite decisions there, then most likely your trading execution is going to be fine-tuned and correct. Go and check your charts, check highly correlated currency pairs, and remember to trade safe.